Welcome to the Deep Dive. We take complex industry sources, break them down, and give you the core insights you need quickly.
That's the plan.
Today, we're looking at the Eastern Caribbean, specifically the emerging iGaming market potential in Barbados. It's a place that looks pretty interesting on the surface.
It really does. And we're basing this on a detailed country report from the Gambling Databases research team. Just for context, that's us. We specialize in these deep data-driven analyses of global iGaming markets.
Right.
We look at regulations, tax structures, player behavior, operator conditions, basically trying to paint a clear picture of what makes each market tick.
And with Barbados, the first thing that jumps out is this. Well, it's almost a paradox, isn't it?
Yeah, you could say that.
You've got one of the wealthiest countries in the Eastern Caribbean, technologically quite advanced.
Absolutely. The GDP per capita is impressive, around 25,366 USD. That's the highest in the Eastern Caribbean.
And internet use.
Strong, really strong, about 80% penetration.
So you see these numbers, a small population, sure, roughly 283,000 people, but high wealth, high internet use. What's the immediate thought for an operator looking at that?
The immediate thought is quality. Quality consumers, people with likely high disposable income, digitally savvy, exactly the kind of players you'd want for an online platform.
Seems like a perfect fit then. But obviously there are hidden risks.
There always are.
So our mission today, unpack the basics, yes, but really dig into the regulatory uncertainty, which seems severe, and figure out if the numbers actually stack up for potential operators.
Let's do it.
Okay, let's start with the foundation. What's the current gambling situation on the ground in Barbados? What's actually legal right now?
Well, it's partially regulated, but with a, distinctly conservative feel. You've got legal slot machines, mainly in tourist spots like St. Lawrence Gap.
Okay.
Horse racing is a big, historically important Garrison Savannah. And the government runs its own lottery games, like Pick 3, Pick 4, that sort of thing.
Pretty standard Caribbean setup in some ways. But the report highlights a key prohibition, doesn't it? Something that tells a story about their philosophy.
It absolutely does. Traditional casino table games, think roulette, blackjack, proper poker rooms. These are explicitly banned in physical venues, no casinos.
Right. No actual casinos.
And that's a big signal. It suggests a preference for, let's say, lower impact gambling, something that fits with Barbados's image as more of a high-end, relaxed destination. That conservatism is crucial background for the online discussion.
Okay, so if you can't play blackjack physically, what are these high GDP, internet-savvy Barbadians doing? They're not just sticking to the lottery, I assume?
No, definitely not. They're active in what we call a regulatory gray zone.
Yeah.
There are no domestic online licenses. No iGaming sites are actually based in Barbados. But crucially, the government hasn't really made any move to block residents from accessing offshore sites, big international names.
So players are just going to sites like BGO, Black Lotus, 32 Red, those kinds of places.
Exactly. They access them freely. No legal trouble for the players themselves.
So there's already an existing untaxed online market happening right now. Do we know how big that is?
We estimate it's quite significant for the population size, maybe 45,000 to 60,000 active gamblers. That's somewhere between, say, 16% and 21% of the population.
Wow.
And that existing activity, it's likely generating something in the range of $15 to $25 million USD annually, untaxed revenue flowing offshore.
Which is precisely why the government would want to regulate.
Yeah.
Right. To capture some of that.
That's the logical driver, yes.
Yeah.
Capture that revenue through licensing and taxes.
But, and it seems to be the big but, all that potential is stuck behind a massive regulatory roadblock. This takes us to the core issue, the regulatory quagmire. The government announced they were working on comprehensive betting and gaming legislation back in March 2023. What happened?
Well, that's the million-dollar question, isn't it? Here we are, based on the report timing of October 2025, and that legislation is still not enacted. Still. We're talking over 30 months. More than 2.5 years of delay since they announced it.
That's not just slow. That feels like a serious problem.
It's a critical risk factor. This kind of prolonged regulatory limbo creates huge uncertainty. How can an operator plan, invest, commit resources when the rules of the game haven't even been written yet?
And it circles back to that conservative signal from the land-based ban on table games. A delay this long suggests maybe fundamental disagreements about how strict it should be. Taxation.
Precisely. It could mean anything. Maybe they're struggling with responsible gaming measures. Maybe it's about who gets licensed. Maybe it's the tax rates. It flags the potential for unexpected, maybe quite restrictive rules if and when it finally passes. The longer this drags on, the riskier it looks.
Okay, let's play devil's advocate. Let's assume the regulations do eventually get passed. What kind of framework are operators anticipating based on, say, regional comparisons?
The general expectation is that oversight would probably shift from the current Barbados Lottery Authority. You'd likely see a new specialized gaming commission set up.
Makes sense. And financially? Fees. Deposits.
We'd expect moderate initial license fees, perhaps in the $15,000 to $30,000 USD range, but likely quite hefty security deposits, somewhere between $50,000 and maybe even $200,000 USD. That's to ensure compliance, cover player funds, that kind of thing.
And ownership. Can foreign companies come in?
Yes, 100% foreign ownership is expected to be allowed, but there will almost certainly be some localization requirements. A registered office in Barbados hiring maybe 2 to 5 local employees. Standard stuff for the region.
All right, so if they get licensed, what are Barbadians actually betting on? What drives player interest there?
Sports betting is the big one. Projections put it at maybe 45% to 50% of the total market revenue.
Any particular sports?
Cricket dominates. Huge passion for cricket. After that, it's mainly international sports. Premier League football is very popular, and the NBA as well.
And the other half? Casino.
Casino games make up around 35% to 40%, and within that, there's a really strong interest in live dealer products.
Ah, because they can't get that experience physically on the island.
Exactly. It fills that gap left by the ban on physical table games. Players want that interactive, real dealer feel.
Okay, so we've got the demand, the high-quality demographics, seems good, but now we hit the financials, and the report language gets pretty stark. It calls Barbados prohibitively challenging. Why? Why doesn't that high GDP just translate into easy money?
It boils down to the scale, really. It's a micro market. Even projecting out 5 years, the total addressable market probably caps out around $35 million, maybe $40 million USD.
Okay.
Now compare that to the operational costs. Running a licensed online operation isn't cheap. Monthly costs could easily be $60,000 to $180,000 USD, depending on the scale, marketing spend, platform fees.
Right.
That potential revenue pool, $35–40 million total for all operators, just isn't deep enough to support a lot of players when the operating costs are that high. Competition gets fierce very quickly for a small slice of the pie.
And acquiring customers in a small pool like that must be expensive too.
Brutally expensive. That's a key finding. The estimated customer acquisition cost of the Comatis is likely between $150 and $300 per player.
Ouch.
Yeah. And then you look at the expected average revenue per user, the ARPU. Projections are maybe $280 to $520 annually.
So hang on, you spend up to $300 to get a player who might only bring in, say, $400 a year.
Exactly. Which means your payback period on that acquisition cost stretches out to like 12 to 24 months.
A year or two just to break even on getting the customer in the door?
Right. That's a long time. It means you need very deep pockets and a lot of patience. It's not a market for quick returns. That capital is tied up for a long while.
And then we layer on the biggest financial question mark of all, taxation. This seems like the make or break factor.
It absolutely is. This is the single biggest swing factor, the one that could kill the business model entirely.
Okay, break it down. What are the tax components?
Well, first, there will definitely be a mandatory tax on gross gaming revenue, the GGR. That's projected somewhere between 10% and 20%. Standard enough.
But that's not the dangerous part.
No. The huge risk, the existential threat, is the corporate income tax. If the standard Barbadian corporate rate gets applied, which is currently 25% to 30%,
Okay.
then your effective tax rate, when you combine the GGR tax and the corporate tax, could easily hit 40%, maybe even 50% of your revenue.
50%?
Yeah, potentially. And given the already high operating costs and CAC we just discussed, taking that kind of tax hit makes profitability almost impossible for most operators.
But isn't the Caribbean known for, favorable tax structures for international businesses?
That's the hope and the massive uncertainty. Barbados has its international business company regime, the IBC rates, which are much lower, only 1% to 5.5%.
Ah, okay. That's a huge difference.
Massive. If iGaming operators can qualify for those IDC rates, the whole economic picture changes. Suddenly, the market becomes viable, at least for the pop, maybe 2 or 3 players.
But they don't know if they'll qualify.
Nobody knows yet. The unenacted legislation hasn't specified whether these new gambling licenses will get IBC status. And until that's clarified, it's an enormous gamble for any investor. That uncertainty alone is probably enough to keep most serious players away for now.
Wow. Okay, so beyond the money, what about just running the operation? Are there challenges with the player experience itself? Things that might make players leave?
Yes, payments are a significant hurdle right now. The current ecosystem relies a lot on credit cards, which isn't ideal for everyone, and bank transfers.
Which are slow.
Painfully slow, like
Yeah.
1 to 3 business days for deposits or withdrawals. And support for international e-wallets, the faster options players often prefer, is quite limited. PayPal merchant accounts, for example, aren't supported.
That kind of friction can definitely drive players away, especially if they're used to smoother systems elsewhere.
Absolutely. Slow payments are a retention killer. Now, there is a local solution in the works.
Right, I saw that mentioned. BIMPay,
Yeah, BIMPay. It's supposed to be an instant payment system specifically for Barbados.
but another delay.
You guessed it. The announced launch isn't until March 2026. So until then, any newly licensed operator is stuck with these slow, clunky payment options
And meanwhile, they're competing
against those established offshore sites, the ones players are already using, who continue to operate tax-free, often offer better odds because they don't have that tax burden, and might already have smoother payment integrations sorted out. It's a tough fight.
Okay, let's pull this all together then. We have high-quality demographics, decent internet penetration, but a tiny market overall, a huge regulatory delay causing massive uncertainty, extremely high costs to acquire and keep customers, and this potentially catastrophic tax situation. What's the final word from the analysis, the bottom line?
The bottom line is pretty clear and, frankly, quite negative. The overall market attractiveness rating given in the Gambling Databases report is just 3.9 out of 10.
3.9, that's low.
It is. It's officially classified as a high-risk emerging market. That high GDP per capita we talked about at the start, it's completely overshadowed by the regulatory and financial risks.
So that 3.9 really tells the story. What does it mean for actual profitability?
It means profitability is going to be incredibly tough to achieve. The analysis suggests that realistically, only the #1 market leader, the operator who really dominates, might achieve meaningful annual profit. And even then, we're talking maybe $800,000 to $3.5 million by year 5.
Only the leader. What about everyone else? Number 4, number 5?
Operators ranked 4th or lower. The data suggests they're likely looking at continuous losses. The market just isn't big enough to support them profitably given the costs and potential taxes.
And the timeline to even start making money back, if you decide to go in.
It's long, very long. You've got significant initial capital requirements needing somewhere between $700,000 and $1.5 million total to get set up and running. Plus, you have to factor in expected losses in the first couple of years, maybe $400K to $800K burn through.
So when do you actually get into the black? Positive ROI.
The realistic timeline is probably 48 to 72 months. That's 4 to 6 years before you see a positive return on that initial investment.
4 to 6 years. Okay. That paints a very specific picture of who should even be thinking about this market.
Exactly. The recommendation is extremely narrow.
Who fits the bill?
There are really only 2 types of operators who should potentially consider Barbados right now. First, established Caribbean operators. Companies already active in the region who can leverage existing infrastructure, share operational costs, maybe bundle marketing across several small island nations.
Makes sense. Share the burden. Who's the second type?
The second is an exceptionally well-capitalized operator, someone with what the report calls 5-plus-year patient capital. Basically, investors who are willing and able to wait out the long regulatory delays, absorb potentially significant losses for the first few years, and wait that 4 to 6 years, maybe longer, for profitability.
Patience and very deep pockets.
That's the essence of it.
And for everyone else, startups, operators looking for faster growth or needing bigger returns.
The advice is unequivocal. Avoid. Definitely avoid. If you need quick ROI, say, positive returns inside 24 or 36 months, this isn't the place. If your business model requires hitting, $5 million plus an annual profit per market to be worthwhile, Barbados just doesn't offer that scale. The risk versus reward simply doesn't add up for most iGaming companies.
So here's a final thought for you, something to consider. That regulatory delay we talked about, the 30-plus months and counting, it's not just an administrative issue. The longer it goes on, the more it actively increases the financial risk. Why? Because capital committed sits idle, waiting for clarity in a market that, even if it opens perfectly, might still take 4, 5, 6 years to pay back that investment. Time is literally money burning here.
That's a perfect summary of the core tension. And that kind of nuanced, data-driven understanding, weighing the pros against the very real cons, is exactly what these deep dives aim to provide. It's about making informed choices, especially in complex emerging markets like this.
A challenging picture, but a clear one. Thanks for walking us through it.
My pleasure. And for anyone listening who wants to dig into the full details, you can find the complete text of this Barbados country report and analyses of many other global iGaming markets prepared by the Gambling Databases research team on our website. Just visit gamblingdatabases.com